Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, February 3rd. All right, guys. Well, we had a little bit of movement to the downside, a little bit of movement to the upside again, a lot of chop. Yesterday really had to be the worst day of the year. I know the year just started, but really price action was horrendous. I mean, it was just not good at all, especially when you're looking for indexing. Different indexes, different sectors, ETFs, just really lousy trading. We've really been in a range. And I'm going to show it to you in spies. It's almost 2 months, and if you go back even more, other than aside from a couple of blips, it's just absolutely insane how the markets are just doing nothing now, hanging out here at the highs. We have an overstretched market, an overvalued market, and earnings are not great. If you're following earnings, which you should be as traders, Amazon came out, they missed revenues by $1 billion. I mean, it's just crazy. And the futures are up this morning while I'm writing this. It's unbelievable, just unbelievable. At one point in time, it's going to change. Obviously, when, no one knows, but I'm saying it looks like to me sooner rather than later. It's what the charts are telling me. But again, guys, price is what pays us. We got to follow the price action of the charts. So let's get right into it. Nothing really has changed at all, other than a real bump up in the dollar off of our support of 25.60. And like I said yesterday, let's see if this thing can get back above our uptrend line and back above our key areas of support, which are now resistance again. So we need to get back above here and really start to challenge this swing high here, or this doji candle here at 28.85. If that happens, I think you'll get a big move lower, obviously in the commodities, and eventually it's going to affect equities as well. But as of right now, it's not doing that because we are pulling back. That's fine. But keep an eye on the equity squadron, the commodity squadron, especially crude oil, which tried to bounce yesterday, failed at certain areas of resistance, bounced again this morning and failed. So it's trying to break out of this 55.25. Remember that. That's going to be the main ticket, 55.25 in crude oil. GDX. Really no change here, guys. Yesterday we had a nice big move up, and then we sold off into this neckline. This is going to be key and pivotal here, right here, guys. 24.50, let's call it. That's going to be that neckline that'll confirm this inverted head and shoulders pattern. Okay, so this is really important, and we're watching this day by day. GLD, okay, same thing with that. GLD, we had a pullback to our proprietary moving average. We tested the swing high here, and we failed. We're right at it right now. Let's see if it has any more momentum to move to the upside. I think we'll probably test the lows one more time, and probably test the highs in equity markets one more time. It just does not seem like the markets want to go down at all. And if that's the case, that means that there's a lot of bullish sentiment, as we all know there is, by looking at the skew. VIX had a 9.5 handle on Monday. I don't know, Monday or Wednesday, I believe. So you know, if that's any type of indication to tighten up stops or buy protection, I don't know what would be, guys, honestly. VIX a 9.5 handle, that's the lowest since 2007, which was 929. Okay, and prior to that, I don't even think we had even a lower handle than that. So just use caution. Sentiment 6-year highs, skew at I believe 3 to 4 year highs. So you know, we're fully vested here in these markets, and we're one-sided. So it's definitely a word of caution. Okay, not that you can't buy the market intraday, but just use caution here. TLT tried to rally and then failed. This is what I'm looking for, right? Okay, if I would suspect that we would look to at least challenge the opening gap here that we have, this gap area of resistance, which coincides nicely with the 200-day. We failed to break out of this swing high. Okay, that's going to be your first key and pivotal area to break out, and we haven't even really gotten that high other than a couple days ago, 121.90. If we break here, the line in the sand is going to be this low here, 116.67. And if we lose that, we continue with the downtrend. All right, right now we're just pausing. This is just corrective at all, if at all, in nature. Is corrective pullback, retracement back up. But if we start to lose this, then I think we go lower. Then I think we could be in for a big flush in bonds. And bonds, remember, on the USB weekly chart, is holding and clinging to the 200-day. If we lose that 200-week moving average, bonds will go much lower. Rates will start to rise. That's going to also affect equities as well. Spiders, what can I say, guys? You can see here probably one of the most boring trading. This pretty incredible. We've been here all since December. Other than a small move lower, a small move up, we've been in a range going on now 3 months. Then if you look back from July, we've had 2-month ranges here. We had one blip down, 2-month ranges here again, and then this is the Trump rally that we had for 1 month. So if you look at it from July, it's been over 7 months, 8 months of range-bound trading. It's absolutely insane, and this is the nature of the beast right now that we're given. So we just got to continue to look for ideas. Step outside of the arena of ETFs if you are an indexer. I like to trade indexes as well. We have our TMT proprietary trading model that indexes and trades futures and ETFs. So I like that as well. But sometimes you got to go out of the box because there's really not much going on here, as you know, other than a Trump rally. And if this Trump rally wasn't here, we'd be much lower. Now we're just kind of drifting higher into this big bearish rising wedge. 60-minute chart shows you the same. You could just see here, guys. Look at how, other than if I move this, let me just show you here, get a little bit more perspective. And it goes back, but since for the sake of time, I mean, look at this. This is absolutely insane. Island top. Now we're range bound again. This is going on 4 days, but within this bigger range, we've been range bound all the way up until the beginning of December, and I could go way back even before that. So not really good price action at the moment. You can see here on a 60-minute chart, this is 4 days of range bound trading. Still holds true. 226.40 is going to be the key area of support to break, and of course 227, let's call it 228, needs to at least fill this gap here, this island top, and see if we start to move over. Now remember, when everybody sees it, it usually doesn't happen, right? Well, everybody now is talking about the island top reversal here. Okay, when we pointed it out back about 4 days, I think it was at the beginning of the week. So we might just see higher prices yet again. And I'll be honest with you, we're on our fifth leg extension, fifth and final of this bull market. It would not surprise me if we pop new highs and get everybody else long and get the rest of the shorts to capitulate, and then that would be the top. It could happen this month. It could happen in March. I'm not sure, but it should happen sometime in the first quarter if everything sets up right. Okay. Next, it's going to be the IWM. This is the weakest of the bunch. Still within the bull flag, but now we're getting a little longer in the tooth in our flag here. So I'm going to still call it bull flag because it's going to be a bigger one in nature. You can see here, take the flagpole. So if you go longer, it actually, in symmetry, it works. So a little bit more, but if we don't take this bull flag, take it out on top or the bottom, and we had a failed bull flag, I'm still looking at the first spot, 38%, and then I'm looking right here, close to the 61.8%, around 126, when we decide to move lower, or when Mr. Market decides to move lower. Transports, still holding in about this key pivotal area. We need to watch this. Keep an eye on this level, 161. And then last is the Qs. Again, a whole lot of nothing, guys. A whole lot of nothing. Facebook reversed off of their earnings, sold off pretty hard yesterday. Apple, pretty much hanging in it, but it's Apple, so that's a cold stock. Everybody wants to buy it just to be in it. Eventually, that'll change as well. And then you have Amazon reported, and I told you earlier, missed their revenues by $1 billion. Stock was down about 39 points today. Let's see if we get a 7 handle in Amazon. And you'll see, it's already coming out. I see a lot of research reports. Oh, you got to buy the dip, buy the dip, buy the dip. So we'll see what happens if people buy the dip. Very courageous individuals buying dips, especially at these market tops. All right, guys, have a great day. Enjoy the weekend. We'll see you on Monday.